Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the commitment of traders, so the COT data, which is what the big players and institutions are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight onto the chart. Starting here from the monthly time frame, what we can see is that we have a market which clearly is still in a monthly uptrend. We can notice how for quite some time now, essentially more than 1 year at this point, we had a clear uptrend on gold with the market creating new monthly higher highs and higher lows. Now, the creation of higher highs and higher lows is the definition itself of an uptrend. Every time you see the market create a new higher high, then a higher low, and then a new higher high, you essentially have the confirmation that the market still is in an uptrend and that buyers are still in control. So every time the market then creates a new correction, what you expect is new buyers to enter into the market and push the price further, creating new all-time highs in this case. So from a monthly standpoint, at the moment, everything is very bullish. The market is still rejecting to the upside this quite strong level of previous historical resistance from which all these rejections to the downside were created. The market then broke above that zone, went for the retest, which is exactly what you expect, because when you have a strong level of resistance that the market has already respected as such in multiple occasions and the market then breaks above that zone, you expect the market to go and retest it as previous resistance turns support and then to reject it to the upside, which is exactly what we are currently seeing. So on the monthly, everything is quite clear. More bullish price action could be expected. Dropping down on the weekly time frame, what we can notice also here is a very clear pattern. We first see a strong impulse to the upside, then we have this triangle formation. Now, usually these are simply consolidation patterns. In this case, it's in the form of a triangle formation or a wedge, depending on how you want to call it. This is often referred to as a wedge or triangle formation, but the principle behind it, very simply put, is that you're having the creation of lower highs and higher lows at the exact same time. That is when essentially you have a triangle formation. You're getting lower highs and higher lows. So essentially the market at some point converges and breaks out. And that is exactly what we're seeing here. We saw the impulse, consolidation in the form of a triangle formation, and then breakout to the upside, a pattern that we see in the market very often. Now, at the moment, it seems like institutional buying is still underway with the market showing strong bullish momentum. And we will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis. But for now, let's drop down on the daily time frame and see what we have. Now, here on the daily, I did speak about gold just a few days ago when the market was creating this correction to the downside. I spoke about it when the market was around this level. I explained all the reasons for which I was expecting this rejection to the upside, which is in fact exactly what the market is currently showing us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But at the moment, what kind of structure we have? Well, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing. Now, if we look at the data for gold, what we can see is that with the last reports, we just went from having 236.1k net positions all the way up to having 257.9k. So we had a strong increase of net positioning, showing how institutions have been moving back to the bullish side for gold, adding another 25,400 longs just with the last report, reaching at the moment 321k longs compared to only 63k shorts. So we have a massive amount of longs compared to shorts from an institutional perspective. So it comes as no surprise that if we zoom out, the market has been in such a strong uptrend fueled by that institutional longing. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, as we just said, there is strong resistance around this area. Now, this is the previous high, and from here, the previous rejection to the downside was created. Now, at the moment, it seems like the market is trying to break above that zone. If that will be successful, so if the market will successfully break above this resistance, at that point, this previous resistance would become support. And after the break on the retest of the previous resistance turns support, that is where there is a good probability to see more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this zone. So if the market will break and retest, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of the market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you click on the like button to support the channel. Also, any questions you might have, let me know in the comments below. Also, new pairs that you would like me to cover in my next videos. Make sure to also subscribe to the channel so you never miss new updates, and I will see you in my next video.